everyone. Welcome to the show today. This is the Business Growth Pod with Allan Draper. That's me, right? If you guys like this podcast, make sure to leave me a review. Whatever platform that you listen to it on, make sure to leave me a review and share it with your friends. What we're trying to do is a couple of things. First of all, we're trying to put some information out there to help people start and grow their companies. And we're also trying to get some motivation, right? When you're starting a business, it's such a big endeavor that, I'm trying to put something out there that gives you a little, motivation to take the next step. So I'm really excited about my guests today. I've got two of them. So I've got Peterson and Landon Mance with me today. They have a great show. It's called the Tycoons of Small Business. I've been on it a couple of times, and they're always producing great information. These guys, they're financial planners. They know a lot about investments. They're entrepreneurs. So I'm really excited to have them. Welcome to the show, guys.
The show's guests, Austin Peterson and Landon Mance, are registered representatives of Lincoln Financial Advisors Corporation, a broker-dealer, member SIPC, and registered investment advisor. The views expressed by Austin and Landon are not necessarily the views of Lincoln Financial Advisors.
Thanks for having us.
Thanks, Allan.
So tell me a little bit more about what you guys do. Tell me a little bit more about the Tycoons of Small Business, why you started it. I just kind of want to get your thoughts on anything you want to tell me.
Landon, you want to take that one?
Age before beauty.
He finally got one in, Allan. So just a little bit of background on why we got it started. So we started our podcast, Tycoons of Small Biz, on Cinco de Mayo 2020. So
oh wow,
if you look back or think back, that's right after the pandemic hit. It's something we'd been talking about for a while. Landon had really been trying to twist my arm to do it. But the whole point of doing this podcast is to highlight a new small business owner every week. So nice. It's an opportunity, it just gives them a platform to talk about their business, what they do, give advice to the entrepreneurial community, whatever we can do to kind of prop up the entrepreneurial community. I think there's some statistics that I actually just recently read that talk about how business growth and business startup in America is actually on the decline. We've got these big companies that are just kind of out there and they're taking over the world, so to speak. But 99% of the people in our country are still employed by a small business. And we just need to do everything we can to push these up. Facebook doesn't need more advertising. Netflix, Amazon, they don't need any more help. It's the small business, the guy down the street who's building a great construction or the real estate development company or a pest control company or plumbing company, that really need an opportunity to get their story out. And that's why we started the podcast.
Yeah, I love that. What's funny is I was on the phone with undisclosed bank just a couple of hours ago, and I told the lender, I told him, like, hey, you guys really don't like small businesses. You don't like entrepreneurs because of, if you're applying for a loan and you're a W-2 employee, you have certain things that you have to provide, and it's a lot less than if you're a business owner. And it kind of hit me as I was telling him that. I'm like, why is that? I was explaining to him, like, I have a lot more control over my job than, somebody that's a W-2 employee, right? Like, but anyway, I just thought that was interesting that a bank, I used to think that banks, like, they're the reason why entrepreneurs can accomplish things, and they're cheering us on from the sideline, and it's just not the case. They're just making things a lot harder than I think that it needs to be. And I get it, some of that's coming from COVID and what's happened over the last year or so, but just kind of interesting how important the small business owner is. And that's the thing, you hear it, and it's kind of cliche, like the backbone of America, right? The backbone planning partners, right? And I don't know if that has anything to do with entrepreneurship, but it's true, right? Like, all these people are working for small businesses, and I think that we think that most people are working for large corporations, and that's just not the case. And I don't have any statistics, but doesn't that sound true? Like that most jobs are created by small business?
Yeah, that's definitely the case. And just real quick, I'll respond to your banking comment. I mean, I think the banks are playing the numbers, right? I mean, there's an awful lot of failure in small business, right? And so they're going to play their numbers, but there are some pretty good community banks out there that do a good job of lending to small business. They understand it, they dig in, they work with them. It's not easy. It's still not easy, right? I mean, you got to have good books. You got to be able to show what it is that you need, what your plan is. But not all banks certainly understand the importance of working with small business. And then the other thing that you mentioned is, Backbone Planning Partners. That's the name of our financial planning practice. And you're right. That's exactly why we named it Backbone Planning Partners, is because we serve the backbone of the American economy, the small business owner. And the second connotation, obviously, is backbone connotes integrity. And Landon and I feel it's important to make sure that we're serving our clients with integrity and doing everything we can to help them achieve their goals.
I love that. Landon, tell me a little bit about Backbone Planning Partners. Tell us a little bit about what you do and how you want help entrepreneurs.
Yeah. One thing, actually, I'll just point out in our logo, actually, which is just recently been updated. Our logo is actually two hands propping up a small building, and then it says Small Biz Inc. Right above it. So not only do we is that kind of our purpose and our mission with our podcast, but it's actually in our logo as well. So yeah, that's what we do, and we certainly believe wholeheartedly in it. So Backbone Planning Partners is a new marketing name for Austin and I. So I used to operate as Your Future Planning Partners. Austin operated as Backbone Financial. Austin and I have been working closely, serving clients together for a couple years. And then we formalized our partnership just earlier this year. And that's where kind of Backbone Planning Partners was born. We took the backbone from his name and the planning partners from mine, and there we go. So yeah, what we do is Austin and I focus exclusively, when it comes to new clients, on serving private business owners, and kind of our sweet spot where we typically are able to provide the most value is a business owner that is doing somewhere between about 5 to 50 million of revenue. That's kind of a typical client for us. And we are a very non-traditional wealth management, financial planning firm. We lead with planning, and we have a process, a very defined, structured process that we follow with every single one of our new and current clients. But some of the key things that we're focusing on is helping business owners to understand that if at some point in the future, whether it's 12 or 24 months or it's 10 years down the road, if they do want to attempt to successfully sell or transition their business, then there are certain things that they need to put in place to give themselves the best chance at doing that. So we focused a lot on that. So kind of the succession and exit planning aspect of working with the business owner. And then inside the business, we're having a lot of different conversations around, maybe the owner's got a key executive or a key executive team, and their business is really ramping up, and they want to make sure that, those people are really locked in and invested, in the business. So we help them to design plans and implement those plans so that their key people stick around, or maybe they want to incentivize new people from outside the firm to come in. We're helping a client of ours who are a couple of brothers that own a successful construction company. One of the brothers is getting out. So we're helping them to design and implement a plan to, keep the family harmony, and also, successfully get the brother out of the business, and then also helping the other two brothers to really stay focused on, driving the business forward and accomplish all the things that they want to accomplish moving forward. And then on the more traditional side, we do all of the personal, financial planning, a big focus on estate planning, and what we call financial independence, which is just, helping our business owner clients get to a point where they're working because they want to, not because they have to. And that's a really important thing to mention, because when a business owner is trying to sell their business or starting to think about it, if they're already financially independent with the stuff that they've done outside the business, it just puts them in a really strong position to go out to market and attempt to sell their business, because they're not going to be dependent on those proceeds to support their lifestyle moving forward.
Yeah, it's funny because entrepreneurs spend a lot of time thinking about their business and different aspects of their business, how to grow their business, personnel, operations, things like that. But that's about it. Professionally, and I'm, speaking from experience, we don't spend a lot of time focusing on other investments. I'm having a cryptocurrency, and I just have it kind of set up on, automatic purchase or whatever. And if I hear about a stock I like, I'll buy some, but I don't really have a plan. And I think that's really common, because I think there's a couple of reasons. One reason is we're super busy. If we're thinking about money, we're thinking about our business, right? How that money ties into our business. The other thing is, a lot of us are thinking, I don't need a retirement plan. I don't need any other financial investments or tools because I have my business, right? And so what do you say in response to something like that? Hey, I have a business that's worth 5, 10, 15, 20 million dollars. I'm good. What do you tell that type of entrepreneur?
Well, I'll jump in for a second, and then Austin will have some thoughts as well. But I mean, back to your point, Allan, about the banks, the private capital markets where we all operate in this small business space are pretty dang inefficient, right? When you get into big corporate finance with public companies, for them to get loans, for them to raise money, for them to buy back their stock, it's just a simple transaction for them, right? They can do that all day long. But in the private capital markets, capital is much more difficult to come across. And that's because in our small businesses, we don't act and feel and operate like the bigger businesses. And what that really means is that we're a lot more risky, right, in the eyes of the bank. So that is why it's so much more difficult. But what we would say to that owner is, that's great. But the reality is, and this statistic will be proven over and over and over with anybody that you will talk to, approximately 70% of businesses that actually get listed and attempt to sell do not successfully sell on the terms that they are seeking. And that's for a myriad of different reasons. And so we just kind of try to help them to understand that. And I actually wrote an article last year, the year before, and it basically said that it's okay to shut down your business, right? If you plan for that and you save outside of your business and you build your business, you build wealth outside of your business, shutting your business down and closing the doors, like that's okay. But if that's what's going to happen, let's have a plan for that so that you can do that successfully on your terms, and it's communicated to everybody, because the reality is that is what happens with a lot of businesses, right? The owner gets sick or disabled, divorced, there's a partner dispute, an illness, like whatever happens. That is why most businesses actually transact, Allan, is because there's an unforeseen event that takes place, and they're forced, usually through like a fire sale, to try to sell their business to somebody.
Yeah, that's crazy. Because that's not what entrepreneurs think when they start their business. They never think that that's how it's going to end. And it sounds kind of like retiring in a way, right? Or leaving a job, how it's just like, what am I taking with me? And in some cases, it sounds like they're not taking much, right? But when an entrepreneur starts with these like ideas of grandeur, these huge exits, and I think you're right. Like, I think you're mitigating some risk by investing in some other things throughout the process, not just, you might not get the returns that you do from a small business through other investment tools, but it does mitigate that risk.
Yeah. So, I mean, like Landon said, that the transactions just don't happen much of the time. There's a high percentage of transactions that just either don't happen or they're not nearly as much as they thought they were going to be. So first of all, most business owners overestimate what their businesses are worth, right? And
Yep.
so then they find out that they're in trouble because they can't sell it for as much as they thought. On top of that, they underestimate what they need to be able to live comfortably the rest of their life in a lump sum amount, right? And then the last thing that I would mention is probably one of the most basic, if not the most basic financial planning concepts, and that's diversification, right? So you mentioned cryptocurrency. My guess is you probably don't have all of your money in cryptocurrency, first of all, but even if you did, you don't have it all in Bitcoin. You probably have some in Dogecoin and Ethereum and, all these different, types of cryptocurrency that are out there, because you understand that betting on one horse is not the smart thing to do, right? Over the last decade, if you bet on the one Tesla horse, you'd be pretty darn happy, right?
Right.
But the risk is still extremely high, even with a company like Tesla. And I understand from an entrepreneur standpoint, you want to bet on yourself, and we love watching entrepreneurs bet on themselves, and the rate of return, like you mentioned, can be tremendous. But that diversification, planning for some of the things that Landon talked about, it's so super important. I go back to Stephen Covey, begin with the end in mind. Let's put together a plan that gets you there, whether you're able to sell your business or not. And if you're able to sell it for the 10 or 20 million or 30 million that you're hoping to get, great. Then guess what? You've got a fantastic future in retirement. You created a legacy for your family, all those kinds of things that are great. But put yourself in the best possible position for negotiating when it's time to sell your business, so that you don't need that money and you can say yay or nay, rather than, oh my gosh, I need that money because I have to retire now, or I got a divorce, or I've got cancer, or, a myriad of things that can actually happen.
Well, and that's such a huge thing, because the market determines so much of what a company is worth, right? Right now in the pest control world, there are companies getting 3.5, 4x, which it is crazy right now, just historic numbers. But it works the other way too. It could be a year where you're running into a few things and they're historic lows. And so having that runway where you can, I've got some other funds set aside so that I can get through this divorce, I can get through this death, I can get through this issue with a partner that's leaving or whatever, and then hold on to another 5 years and then double, what your exit is. I think that's huge. So walk me through the process, guys. What's the first step? An entrepreneur comes to you, small business owner comes to you guys. What's that first meeting like? What's kind of the objective? Are you trying to figure out what, the personality type is, risk tolerance, things like that with the entrepreneur?
Go ahead.
So, here's kind of our initial process. I'll try to whittle it down to just a minute or two explanation. But first time we meet with somebody, pretty standard conversation in our industry. We're going to pepper you with a lot of questions. The only difference is that we're going to be peppering you with a lot of questions that not many other wealth managers would be asking, because we're going to be asking a lot of questions about the business, a whole bunch. And then after we've gathered all this information that we need, so our first meeting is, typically about an hour. And the last couple minutes of our meeting, we're going to communicate to the person what happens next. And from there, we're going to take all the data that they've shared with us. We're going to request some documentation to verify some of the stuff that they have provided to us. And then we're going to put in anywhere from about 2 to 4 hours, and we're going to put together an engagement proposal. And at our second meeting, we're going to go over that engagement proposal, and we are going to list out everything, exactly what we are going to do for you. And then we're going to quantify that value for you so that you can understand the true impact that that's going to have on you, your family, and your business. At the end of that second meeting, if we agree that it is a good fit, and usually if we're going to set up the second meeting, typically is a good fit, and then we're going to make that decision at the end of the second meeting, not necessarily on the spot, of course. We give them as much time as they need to make a decision, because at this point, we want their business, but we don't need it, right? So it's a little bit different approach that we take. And then if they decide to engage us, they're going to pay us a flat fee to do all of the planning, and that is usually somewhere between, a typical fee would be about 10 to 20,000 up front, and then we get to work. And we're going to spend the next couple of months having a series of meetings and conversations with you, your key people, and your key advisors, so that we know everything that there is to know about somebody, as much as they're going to possibly share with us. We're going to start building relationships with all their key people inside the company and outside. And typically, the main role that we're going to take in that initial phase is we're going to be the captain, the quarterback, whatever you want to call it, and we're gonna lasso in all their important people so that everybody is on the bus in the right seats, and we're all driving in the same direction together. Because a lot of times, Allan, I think you kind of alluded to this, entrepreneurs are setting up different accounts at different times with different advisors with different objectives, and there's this huge lack of coordination amongst their financial stuff. So we're helping to coordinate that, to fill in the gaps, to identify missed opportunities, and just kind of get everything flowing in the right direction.
So what's the significance of getting it all together? We're talking about how important diversity is in different assets and investments and stuff. So, I've got several different funds, I use different banks where I buy stocks and things like that. Why do we need it all centralized? What's the purpose of that? Is that just to kind of see what's out there and make sure that risk tolerance is balanced and all of that?
Yeah, it's not really about it being centralized per se, right? Because many of our clients will leave those accounts in place. We're not necessarily asking them to move accounts. Is it all part of the plan together, and is everything working together, right? Just like you wouldn't set out to build a house without having an architect first draw the plans. We're drawing those plans and making sure that everything fits together, and you've got the right type of wood holding up, and the right structure for the trusses, and all that kind of stuff. We're essentially doing that same thing for your financial plan. We're going to stress test things. We're going to make sure that the tax guy and the legal guy are all working with us to make sure that you're not just trying to save taxes, but you're actually saving taxes where appropriate, but putting yourself on the right path to achieve your overall financial goals. And we can't avoid taxes along the way. We want to defer them and avoid them as much as we can, but that can also be somewhat detrimental to where you get ready to transact later and you've had a business that's wildly successful, but from a tax standpoint, it doesn't show that it's wildly successful. Guess what? It's pretty hard to sell a business at that point when your EBITDA doesn't show big numbers.
Right. Yeah, it's funny because the longer I'm in business, the more I realize a couple of things. One of those things is before I do stuff, I start to ask professionals, right? And I'm an attorney, but I don't practice anymore. But I have, 4 or 5 different attorneys that I regularly communicate with on different things. I have a CPA. We were talking about just recently with a gentleman that runs the operations for one of my companies, and we were talking about how we should transition, whether we, purchase vehicles or lease them. And my first, recommendation to him was, hey, reach out to the CPA, see what he has to say. And so it sounds like you guys are kind of in that role, right? As an entrepreneur is going along this path of building their business and making decisions, you guys are kind of involved in helping them make decisions about where to invest their money. Are you helping them decide, hey, should I put this 100 grand back into my business or should I invest it elsewhere? Are you guys involved in that?
Yeah, we definitely have those conversations on a regular basis with our business owners. And, I don't know if you keyed in on this when Landon talked about it, but we charge a fee for our services, for our advice, much like an attorney would, right? You used to practice law. And so we charge a fee for our advice. But when we do that, which is different than most financial advisors, because they're looking to sell you an investment product or an insurance product or manage your investments, and that's how they get paid. Many of our business owners, we're working with them for 10 or 15 years on transitioning some of their wealth from their business balance sheet to their personal balance sheet. But when they have no investments early on, that's how we still profitably serve our clients and do so in an unbiased manner because they're paying us a fee for our advice. And so there's never a question in your mind of, is he telling me to put this money here because he gets paid on it? Or is he telling me to put it here because it's the best thing for me and my overall financial situation?
Yeah, it's kind of, I think that's a great strategy because you're not married to any investment strategy or fund or whatever, right? What type of performance, what type of returns can an entrepreneur expect from investing in kind of these different avenues that are outside of their business? Like, are you guys doing what are the investment tools that we're talking about? Are you guys telling people to go put everything in, mutual funds, stocks, bonds? Are you telling them to buy other businesses? Real estate, all of the above?
Yeah, it's definitely all of the above. So from a rate of return standpoint, sorry if I stepped on you there, Landon. From a rate of return standpoint, it's across the board, right? Because every one of our clients is a little bit different in their time horizon, their risk tolerance, but it truly is everything that you just mentioned and more, right? I mean, we're going to help them look at a business, and we're not, necessarily M&A experts by any stretch, but we will help them evaluate a business and look at the opportunity that's there and make sure that we bring in the right team members to say, yeah, this is a good opportunity for you to expand, or it's an industry that's adjacent to yours and this makes good sense. So it's not about, again, selling them a particular investment, right? We do all of it. I mean, Landon and I manage just shy of $100 million in investments overall for our clients. And so it's not that we don't do it. It's just that those are the vehicles sometimes that get our clients to that financial independence that they're seeking. It's not what we lead with.
And are you guys, if somebody says, hey, I would actually like to invest in other types of businesses, get into different industries or whatever, are you guys in a position where you're bringing potential deals? Like, hey, there's this person that's, looking to sell at least a portion of their business. Are you guys doing that type of thing, or are they doing that on their own, bringing the opportunity to you guys and allowing you to analyze it a bit with them?
So I would say both, depending on the size of the company. If we're looking at a company that's doing a minimum of 1 to 2 million of EBITDA, AKA profit, then yes, if they're looking to bring in an investor, they're looking to raise capital, they're looking to do whatever, then we will absolutely, through a group, through a colleague of ours, we can introduce them to parties that might be able to help with what they're trying to accomplish. Now, if it's a smaller business, maybe they're doing 1 to 5 million of revenue, and maybe they're doing at or below $1 million of profitability, and they're looking at a deal. The role that Austin and I are going to play in that situation is we're going to just kind of help them to pump the brakes a little bit, because usually they're trying to rush into something like that because they're excited. And we're going to ask really good questions, and we're going to arm them with really good questions to ask the seller, if they're attempting to acquire the business. So, we're not business brokers, we're not M&A advisors, but what we are is really, really good at helping our clients to ask really good questions, because that usually leads them to the answers that they need in order to determine if something is a red light, a yellow light, or a red light. I'm sorry, green light, yellow light, or a red light.
Gotcha. So what are some mistakes that you guys see really common with beginning entrepreneurs in terms of investing? What are those entrepreneurs doing wrong, and how do they do better?
Yeah, well, I'll start out, and I'll just say something real quick, and then we'll pass it to Austin. Allan, I personally, I've seen a lot of people start businesses, some very successful and some not. And I think it really comes down to just having a game plan on how you are actually going to grow your business. And that does not have to be a 50-page document. I mean, it can be a 1 to 3-page document that addresses all of the important aspects of a business, HR, finance, legal, operations, there's a few others, but how are you actually going to approach each aspect of those business? And then also understanding what the different roles are that you are going to be responsible for. And then putting, in this plan that you're putting together, saying, okay, right now, as a new business owner, a new startup, I am currently wearing 16 different hats, right? And over the next 12 months or 24, 36 months, I would like to offload some of those hats that I'm wearing to other people so that they can do that stuff and I can focus more on the important stuff. So it's where are you right at this moment? Where do you want to be in 12 or 24 or 36 months? What team needs to be in place? What revenue needs to be in place? How are you going to achieve those things? And then just getting that down on paper so that you can track and measure the steps of your business. And most entrepreneurs just don't do that. And some even very successful ones still don't do that, but they've just kind of gotten to where they are by grit, by chance, by luck, by determination, whatever their circumstances.
Gotcha. I'm kind of in that boat, now starting to finally get, some more concrete ideas and plans in place. But when we first started, we're trying to keep the lights on, right? It's tough to start to develop some of those plans and ideas when you're just trying to keep your head above water.
Yeah, I think it's tough early on, but just to answer your question real quickly, I mean, Landon touched on it a little bit, but what we see is not tracking the financials is very common. And if you don't know your numbers, you don't know whether or not you're successful, right? And what's going on in your business. And, Landon talked about that short business plan, which I agree with 100%, but one thing that's real simple and easy to do that Landon and I have even recently done in our organization is to just whiteboard what your org chart looks like today and what you want it to look like in the next 6 months to 5 years, and then identify which one's the next hire, then the next hire, then the next hire. What's it going to cost you? How much revenue will that allow you to increase by adding that person? And how much do you need to be able to increase by if you're going to add that cost? You know, it's a real simple thing. We literally did it on a whiteboard in the conference room of our office in Las Vegas, snapped a picture of it when we were done, and moved on. And that allows us to kind of keep our own, you know, plan moving along with the growth of our practice. So it's a real simple way to do things. And actually, to add to that, I recently shared that in a Vistage meeting with one of the members of our Vistage group. And I said, you know, a great way to actually help your employees visualize what the future is going to look like in this organization is to get a big whiteboard, put tape on it for the org chart as it stands, and then put the empty spots as to where it's headed, and bring them in and show them, this is the future of the organization. This is where we're going. These are our next few key hires, and it may be promotion from within. And if you have a desire to do that, you can show me you've got the experience and the skills to do that. You may be filling this spot, but this is where we're going. And that allows your employees to know they've got a leader who's thoughtfully thinking about the future of their business and somebody that they can feel comfortable following.
That's such a great idea, because usually when a company's laying out a quote unquote vision, it's all about revenue, right? Or even bottom line or growth or whatever, but it's not as applicable to your people. But if you put an org chart up there and you're like, hey, you know, we're going to add this role and we're going to add actually this entire department, you know, we're going to integrate so that we're not outsourcing, you know, this function or whatever, man, I think that helps people get on board. And one of the reasons that people stay with a company is because they can see themselves having a future there. And with that, I think that org charts, I think that's a great idea. And you can kind of start dreaming a little bit. Like I've always wanted an internal designer, my own designer that at any moment I could send something to, but there would be a spot for that on the org chart, right? Like, hey, this is kind of the future, and map it out. With one of our companies, we've done something where we took like just a map of the United States and like pinpointed where our offices were going to be in the future. And that it sounds like kind of this similar concept, but even better with people and the direction that you're growing. Well, gentlemen, this has been awesome. Where can people find out more about what you guys are accomplishing, get some more information about how you serve entrepreneurs?
Yeah, so you can check us out on our podcast, which is Tycoons of Small Biz. Our website is backboneplanning.com. And then, of course, we are both really active on LinkedIn, Landon Mance and Austin Peterson. Shoot us an email. Austin and I are hopping on Zoom intro calls multiple times a week. And we love, just like you do, Allan, you know, we love connecting and having conversations with people. Sometimes absolutely nothing comes out of it. And sometimes it turns out to be a lifelong relationship, and both of those are okay, you know, because you're not gonna connect with everybody that you have a conversation with. But we love meeting people, love learning about businesses, love learning about best practices when it comes to our own business, and so we'd love to chat with anybody that wants to chat.
Yeah, that's awesome. And I love connecting with people. And I always say that nothing has come of it yet, right? Because you don't know when you connect with people, something could happen 5-10 years down the road. I had texted somebody a year ago, and they texted me this morning asking me about vendor that I use, and I didn't even know who it was, but to them, they felt comfortable reaching out to me and getting my thoughts about this vendor. And so I had just kind of shrugged it off. I probably need to figure out who it was that texted me, but that's the thing with connecting with people. And these are two guys that you want to have in your network, so make sure to reach out to them. Thanks for joining me, guys. This has been great. These are two entrepreneurs that really know their business. People that know about money are good people to have in your network. So anyway, thanks for joining me today, guys. I'm glad you could join me.
Alan,
Thanks so much, Alan.
If you have enjoyed today's podcast, please leave us a rating. And for daily inspiration and business tips, follow Alan on Instagram. Until next time, remember, we build the future one entrepreneur at a time.